Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Tuesday, the 29th of July, 2025. So as usual, before we kickstart our gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Give me 1 second. It seems to be that I already kickstarted. One second, just to make sure that everything is okay. All right. Just a quick check on the sound. All right, so hope that everything is fine. Yeah, I think I should be fine, right? Yes, I think it should be okay. All right. So basically, very good morning to all. So just a while ago, there is a bit of technical glitch in terms of the sound. So hope everything is okay. So right now, this will be the disclaimer. So as usual, we will actually kickstart our daily dose of market insights with the first segment, which we will do a quick recap of what has taken shape in terms of the movement of the broad-based cross asset classes that we cover on a daily basis, which is this the four major US dollar pair, the major stock indices, 6 of them, and the two key commodities market, which is the gold XAU/USD and the West Texas crude oil. So yesterday's major movement or significant movement took place in the FX market yesterday. So what I could see over here is that the FX market yesterday, at the start of the European session yesterday, which is around Singapore time, that's 2 p.m. Singapore time yesterday on Monday, which is 28th of July, we see a big spike up in that US dollar. So what do I mean by this? So if you were to actually look at my chart over here, right? So this is the 5-day rolling performance of the US dollar against other major currency as of now we are speaking. All right, so what we could see at this point in time over here, Monday. All right, so during the start of the Asia session on Monday, so which is this line here, let me go further. Yeah, this part, 6 a.m. Singapore time, we see the dollar plunging. All right, over here. All right, so this is actually indicative that if all these lines are coming down, that means the dollar is losing strength against the respective major currency. All right, so what I do is that I plot the dollar as a base currency against a slew of major currency like the euro, the sterling, the Swiss the sterling, the Swiss franc, the cat, the Japanese yen, the dollar against Sing, the dollar against Chinese CNH, and the dollar against the Aussie, the dollar against the Kiwi. So we see that across the board, dollar sold off at the start of yesterday's Asia session, which is 6 a.m. Singapore time, because of that optimism coming up from that EU-US trade deal, where EU decided to actually solve some hiccups between the trade negotiation in the last few months with US trade officials, and finally US decided to lower down that earlier on threatened 50% tariff, which Trump initially put a face figure on it, and has been reduced down to 15%. So EU products now is actually costing lesser versus to 2 months ago. All right, so that was actually a pretty much rejoicement to the FX market, where the euro got bid up and the dollar got sold off over here. Then thereafter, upon hitting the start of the European session, which is 2 p.m. Singapore time over here. All right, so at 2 p.m. Singapore time, we start to see the dollar strengthening, all right, across the board. All right, so there's actually a significant spike up in the US dollar across the board, and the worst hit was against the Swiss franc, the euro, and as well as the sterling over here. So in fact, the euro dollar actually fell close to 1% against the US dollar. That means the euro fell against 1% against the US dollar, and that is the steepest fall so far since in the last 2 months. Later, I'll share the chart of the euro dollar. All right, so right now over here is that what causes this spike up in the dollar is because after market participants has a close, as I mentioned, of that so-called surface trade agreement between EU and US on that so-called trade, we call it tariffs negotiation plan, where Trump and the EU official announced on Sunday, but they have not put in writing yet. So after a closer detail on what the key points are, in fact, what you could see over here is that some of the European so-called we call it business industry, especially those in Germany, voices concern about this EU US trade deal. And these business leaders in the German industry felt that EU has been shortchanged by the US. So what do I mean by this? Okay, so let me put it in bigger font so that you guys could see. All right here. Okay, so the deal will see European Union accept a 50% tariff on most of its exports to US, while reducing levies on some American products to zero. That means at the end of the day, it's a bit of an unfair situation for European unions, because whatever products that European unions is selling to US has a higher cost of 15%, that's 50% tariff. Yes, that's even much lower than the earlier threat of 50% and 30% by the US White House administration. But however, American products heading into European Union, that means American products heading to European unions, is actually kind of duty-free, almost zero. So that's considered as an unfair deal. And according to some German officials, this Wolfgang Niederbach considered as inadequate compromise over here. And if you go down over here, is that there could be even some of the business leaders. Okay. Okay, so over here, so industry officials in Germany have warned that the deal leaves the auto industry exposed and will make companies in Europe less competitive at this point in time. So, and also even a 50% tariff will have immense negative consequences for the German export-oriented economy over here. So with that, that actually causes the euro to actually sold off after that earlier gap up of 0.3% at the start of the Asia session. And with this negative feedback loop of the euro dollar selling off, the euro selling off against the USD, that also causes the intraday underperformance of the European stock market yesterday. So what you could see is that the German DAX actually was the worst performer among the European benchmark stock indices, down by -1%. But what's interesting over here is that as we are speaking, the Germany 30, yes, it has an intraday sell-off, but that intraday sell-off managed to stop at the 50-day moving average. So later I'll share with you what is the possible short-term intraday technical configuration that the Germany DAX is evolving right now. All right, so just bear with me for a while as we coming to the second segment of today's daily dose. So let us continue with the first segment of today's daily dose first. So given that the dollar continues to hold strength yesterday, then this dollar strength doesn't has a negative feedback loop into the major US stock indices. So the major US stock indices continues to actually be on a rather upbeat mood. So what you could see over here is that the SPX ended the session almost unchanged after briefly hitting 6,400. And what's interesting over here is that the Nasdaq 100 continues to soar to fresh all-time high yesterday, outperformed by 0.36%. With an intraday gain of 0.36%, and it closed at 23,356, which is a fresh all-time high, whereas the Dow Jones Industrial Average and the Russell 2000 consolidated, not really a kind of a steep corrective sell-off yesterday, with only a minor loss of negative 0.14%, and the Russell 2000 is down by also a minor loss of negative 0.2%. So what explains the outperformance of the Nasdaq 100 is it continues to be helped by the mega cap technology stocks over here. So NVIDIA continues to actually shine in this AI-driven bullish momentum play that is still intact. So NVIDIA continues to soar to fresh all-time high yesterday, up by 1.87%, and spreading across an entire positive feedback loop back into the semiconductor industry. And also other mega cap stocks also perform pretty well as well. Amazon up by 0.58%, and Meta up by 0.69% over here. Microsoft down slightly, negative 0.24%, and Apple down by negative 0.08%. And bear in mind also that this will be also a pivotal week for the US stock market. Why? Because the 4 mega cap technology stocks is actually reporting their Q2 numbers this week. So by the end of Wednesday US session close, that means early Thursday Singapore time, which is the 31st of July, after 4 a.m., we will have the earnings release of Microsoft and Meta. All right, we'll touch more about that thereafter. So now with that, let us now, we call it, take a look at this so-called performance of the Asia Pacific stock indices. So the Asia Pacific stock indices, due to the dollar strength rebounding, we also start to see a kind of a profit taking or a corrective pullback taking shape on the major benchmark Asia Pacific stock indices. So the Nikkei continues to be down for the fourth, I think, consecutive session, down negative 0.9%. And bear in mind over here is that the Nikkei is now also coming very close to a pivotal support level, which I'm going to highlight to you guys after that earlier steep 2 days of rally that was seen late last week. All right, and the Hang Seng also down by negative 0.9% as we are speaking right now, due to a stronger dollar, and we see it spreading across the other Asia Pacific stock indices. The STI is actually down for the third consecutive session, down negative 0.44% after close to a very steep rally of showing 14 day of consecutive fresh all-time closing highs in the prior session in the last 2 weeks. And the Australia ASX 200 is also down by negative 0.3%. And one of the outlier that is shining right now is the Kospi 200, which is the South Korea benchmark stock indices, is outperforming with a gain of 0.5%. So net overall, what we could see over here is more of a lackluster movement in the Asia Pacific stock market, as well as majority of them are actually trading with intraday losses as we are speaking, due to a negative feedback loop of a firmer US dollar. Yes, and also because of this firmer US dollar, if you look at the US dollar index over here, looking at the gauge, so yesterday's push up in the US dollar index over here, which is rose by 1%. So this is the highest gain so far since 12th of May over here. And if you go down to a monthly performance basis, given that this is the last trading week for the month of July, so far this will be the best month that the US dollar index managed to actually hold. All right, so for the month of July, it's actually up 1.92% after trading down for 1, 2, 3, 4, 1, 2, 3, 4, 5 consecutive of bearish monthly candle since February this year. And what's interesting over here is that we have an intraday bearish breakdown below this long-term ascending channel from May 2011 low. So there was a daily breakdown from this long-term ascending channel. So this channel is about more than 10 years old. And if by the end of this month, it managed to continues to be showing this kind of positive price movement. I mean, having a bullish monthly candlestick. That means going forward, there could be a corrective bounce on the US dollar index heading into the month of August over here. So it could actually do a corrective rebound retracement to retrace up to 100.40 and 102, which is very close to the 200-day moving average. That means after that, we call it 5 consecutive months of bearish candlestick on the US dollar index. All right. This is something to take note of. But nevertheless, I will cover this in greater detail in my daily dose on a daily basis, all right, as we uncover the short-term intraday technical outlook on the major US dollar pair. And also yesterday, we also start to see a bounce on the so-called this West Texas crude oil as well. So this West Texas crude oil, yesterday we do a bounce over here. So on the daily chart, okay, so the West Texas crude oil managed to have a rally of 2.7 or 2.8% over here, but it continues to be congested in this kind of range configuration over here. So at the bottom, this will be the bottom of the range. Okay, so it continues to trade in this kind of 1 month plus of range configuration since the low of 24th of June. Okay, over here. So what causes the spike yesterday of 2.8% is due to Trump. We call it highlight that he's getting a bit impatient related to, okay, where is this? Yeah, this is the one. Okay, so he's getting a bit impatient regarding about the conflict between Russia and Ukraine that keep on dragging. And because US President Trump mentioned that he will move up the deadline for Russia to agree to a truce with Ukraine, reignited concern that tension between Moscow and the West will threaten the flows of crude supply. So one possible, we call it a carrot, that US could use to actually threaten Russia to come to the negotiation table is to ignite more sanction on Russian oil exports over here. And we know that Russia oil is one of its key economic driver to actually, we call it, replenish its coffers after this close to about 3 years plus of conflict between Ukraine and Russia. So with this Trump remark of potentially moving up the deadline for Russia to agree to a truce to Ukraine, that actually ignite concern about this potential of sanction on Russia oil supply. So that actually could potentially tighten global oil supply and causes the intraday 2.8 rally in the West Texas crude oil. So later I'll share with you what is the key technical levels to look out for today on the West Texas crude oil when I cover the second segment of today's daily dose. All right, and also with the weaker with that so-called stronger US dollar yesterday, it also created a bit of negative feedback loop for the gold price as well. So we know that gold has a indirect correlation with the US dollar. That means every time if the US dollar starts to see a significant push up, gold price will tend to drop, and that actually took shape yesterday. So if you look at the movement of gold over here, okay, let me share with you on the daily chart. Okay, so this gold over here right now, 4 for 1 2 3 5. All right, so he fall for the fifth consecutive session and hit the pivotal support at 3,300, which is this so-called parallel ascending trend line taken from the low of 15th of May over here. So since hitting the fresh all-time high on 22nd of April, all right, it seems to us that the gold price XAU/USD, this is the daily chart, seems to be trapped inside this kind of triangle-like sideways range configuration, okay, at this juncture. And yesterday it hit the lower limit of the the triangle range support, which I actually plotted this ascending trend line from the low of 15th of May. All right, so pretty interesting price movement over here. Yes, we start to see 5 consecutive day of sell-off over here. So later I'll uncover to you guys what are the short-term technicals that is actually displaying on the lower time frame chart right now of gold, which is XAU/USD. So with that, let us now jump straight into the second segment of today's daily dose, which I will touch on more on the intraday technical outlook, starting with the FX market. All right, so now let me expand my screen. Oops. Give me a minute. All right, I think the screen is being expanded. Okay, so let us start with the FX market first. All right, so this will be the euro dollar. So yesterday, euro dollar plummeted by 1.3%, being the worst performer among the major currency yesterday. And what's interesting over here is that this plummeting of the euro dollar managed to actually start at the 50-day moving average, all right, which is at 1.1570 over here, okay, at this juncture. So if you were to look at this is a daily chart, if you were to switch down to a lower time frame chart at this point in time, so the lower time frame chart, we starts to see the RSI hitting a extreme oversold level. All right, so this RSI yesterday it went down to a low of 18.3. So at 18.3, this is the lowest level. Okay, this is 18.3, right? Yeah, 18.3 is the lowest level since 12th of May. All right, so at the 12th of May, it was it was 17.5. Okay, so given that it has reached a close to a kind of what a 2 months plus of extreme oversold level, there could be some signs of a bounce taking shape in the euro dollar today. But however, we do not see a bullish divergence at this point in time. So we don't have a bullish divergence. So RSI continues to shape a lower low in line with the price action of the euro dollar. So given there's no bullish divergence, with respect, with context to this extreme oversold level on the hourly RSI being the most oversold since May this year, uh, and also coming close to the 50-day moving average, acting as a support level at 115.60. There's also confluence with the former minor swing low of 16th of June and 17th of July that previously kickstart this minor rebound that only sustainable in the last week or so. Yeah, only last week before it plummeted downwards. So with that, I will have a neutrality stance for now. So neutral between 115.60 and 116.80. So only a bearish breakdown below 115.60 that will potentially trigger off a start of a multi-week corrective decline sequence for the euro dollar, exposing the next near-term support level in first step at 115.20, followed by 114.50 next, which is the minor swing low area of 19th of June and 23rd of June. So in order for the boost to actually recover after yesterday's sell-off, it got to have a fast clearance above the upper limit of the neutrality zone at 116.80 for today. So for today, we will flip to a neutrality stance of for the euro dollar, neutral between 116.80 and 115.60. Next up will be the sterling dollar. So the sterling dollar continues to trade below the 50-day and the 20-day moving average, giving it as a weaker currency versus the euro, as the euro is still holding above the 50-day moving average. So the sterling dollar very clearly, yesterday it also broke down below the former 16th of July minor swing low, where it attempted to do a minor bounce that only lasted for about 5 days, which is last week. Then what we could see right now is that the sterling dollar, it appears to be now evolving in this minor descending channel that is in place since the high of 1st of July. So potentially indicating that the sterling dollar is in the midst of a multi-week corrective decline sequence right now after the bearish breakdown of yesterday's that 16th of July former minor swing low. So with that, I'll be flipping to a bearish bias on the sterling dollar using a 134.10 as my short-term pivotal resistance level. We also confluence with this former minor trend line support that I drew from the former low of 16th of July and 17th of July now turns into a pullback resistance after the break of this 134.10 during during the early part of the US session yesterday. Realized that it actually triggered off a intraday steep sell-off. So in terms of technical analysis, sentiment perspective, this 134.10 could be a very important inflection point in order for the bears to actually maintain that bearish momentum once it's retest this level again at 134.10. So using 134.10 as my short-term pivotal resistance level, given the fact that the hourly RSI is at the overbought level, so there could be some signs of a bounce back towards the 134.10. Intermediate resistance level to watch will be the former minor swing low of 16th of July, now turns into a pullback, intermediate pullback resistance at 133.75. So using 134.10, in any case of any bounce that didn't surpass 134.10 short-term pivotal resistance, we will flip to a intraday bearish bias on the sterling dollar. Next support level to watch in the near term, 133.30. A breakdown below it exposes 132.50, which is the minor swing low of 14th of May and 16th of May, and also confluence with the lower limit of this ongoing minor descending channel that I drew from the high of 1st of July. Only a bullish breakout at the hourly close above 134.10 that would invalidate today's intraday bearish bias to see a minor recovery in first step for the sterling dollar, for the next intermediate resistance to come in at 134.70, followed by 135.30, which confluence with the 20-day and the 50-day moving averages. Next up will be the Asia Pacific currency against the dollar, which is the Aussie dollar over here. So what's interesting over here is that the Aussie dollar also managed to shape a bounce of the 50-day moving average as well. Okay, so given the way it bounces off over here, it's formed a lower low. Okay, there's a lower low. Okay, but what's interesting is that taking in consideration when the lower low is being formed between this same period of time, the hourly RSI is not moving at the same movement, but instead is sloping upwards at the oversold level, which is a bullish divergence. So indicating that downside momentum that is being seen yesterday during the European session and the US session has started to wane off. All right, and where it went off at the 50-day moving average, and this 50-day moving average also coincide with a key graphical short-term minor support area at this 21st of July and 22nd of July minor swing low, where it tested twice before shaping that steep intraday rebound taken over in the span of the 3 days from last Tuesday all the way up to last Thursday. I would say 2 days, 2 days span. So given this positive element that is forming on the Aussie dollar, I'll be using 0.65 65 figure level as my pivotal support level, which also confirms very closely to the 50-day moving average that managed to find support after yesterday's steep intraday sell-off. Two key resistance level to watch for today will be 65.40, a breakout above 65.40. Okay, in fact, it's a zone. Let's put a zone over here. Okay, there's a zone. So 65.40/65.50. All right, so it's a 10 pips different zone. Okay, because given that the 65.50 also confluence with the 20-day moving average, making it as a rather important short-term technical level to watch. So first resistance zone to watch for today will be 65.40/65.50. Above 65.50 will allow the bulls to gain more traction for at least a minor bounce to take shape for today, retesting yesterday's Asia session high before the steep sell-off took place during the European session yesterday. That will be at 65.80. So having a bullish bias given the positive technical short-term elements that I explained or highlighted earlier, using 65 figure as my short-term pivotal support. Two resistance level to watch in my short-term intraday bullish bias for today will be 65.40/65.50. Above 65.50 may seek out the next intermediate resistance at 65.80, which is the intraday high of yesterday's Asia session before that steep sell-off took shape yesterday. However, if price action starts to plummet down lower at 65 figure level, then we will start to see another round of very choppy movement. That means, i.e., the Aussie dollar continues to be trapped in this complex sideways range configuration that previously has taken shape since April this year. All right, over here, it's going to be trapped in this side of very complex choppy sideways range configuration, exposing the 17th of July minor swing low area, acting as the next near-term support level at 64.55 in the first step. So that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen yesterday we were neutral, and it broke above the upper neutrality limit at 117.90 and almost hit the pivotal resistance zone at 149 figure / 149.60. So that's my medium term pivotal resistance zone. So in fact, this is the range top that is in place since 12th of May 2025 and also confluence with the key 200-day moving average. And what's interesting over here is that after this spike up above the upper neutrality limit, or after the bullish breakout of this upper neutrality limit at 147.90, the hourly RSI has started to shape a bearish divergence. Start to see a lower high over here, right? That's a bearish divergence. So given that it's almost hitting our medium term pivotal resistance level, okay, which is the 149 figure, 149.60, in terms of reward risk ratio, it seems to be rather minute to have a bullish bias right now. So what I will do over here is that I will try to fit that strength as it approaches the 1490 / 149.60 medium term pivotal resistance zone, the upper limit, to have a bearish bias for at least a minor pullback towards the 20-day moving average at 146.80. So first support level to watch will be the 147.90, which was the breakout minor, which is the range breakout level of last Friday minor resistance level, now turns into a first level of pullback support. Below 147.90 potentially exposes 146.80, which is the 20-day moving average, I think, as the next intermediate support as well. So for today, given that it's coming very close to the medium-term pivotal support zone at 14 medium-term pivotal resistance zone, pardon me, at 149 figures / 149.60, there's also confluence with the key 200-day moving average, and this zone over here is the range top that is in place since 12th of May 2025. So if you want to be my range top, so if you go to the daily chart, so this is the range top that I mean, 12th of May, right? As it continues to trade in this kind of complex sideways range configuration, or something like ascending range configuration on the dollar yen since hitting the low of 22nd of April, rebound 12th of May, then it can't break above the 149 figure level, 149.60, and so confluence with the 200-day moving average. So given that it's floating back to the top of the range, so in terms of reward risk ratio, it doesn't yield to be bullish right now, given that it's coming to the pivotal resistance zone of 149 figure, 149.60. So I'll be fading the strength as it approaches 149 figure, 149.60, to have a bearish bias on in the very short term to revisit the 200-day, the 20-day moving average again. So two key support level to watch for today: 147.90, a breakdown below 147.90 exposes 146.80, 146.80 next, which confluence with the 20-day moving average. But however, if price action, instead of coming down, it starts to pierce upward again and breaking above 149.60, that I got to respect the price action, and that could potentially see a further squeeze up towards 150.40, followed by 151.15, 151.30 next. So this level is the minor swing, medium term swing high of 28th of March this year. So that's for the dollar yen. All right, so next up will be the Asia, the 6 major stock indices, starting with the Asia region first, or the Asia Pacific region, which is the Hong Kong 33. All right, so this Hong Kong 33 is representing the Hang Seng Index. So the Hang Seng Index, yesterday we do highlight a pivotal support level to watch, which is 25,260. So price action now is testing this 25,260 as we are speaking over here, which is also the minor ascending trend line, taken minor ascending channel taken from the minor swing low of 10th of July over here. So given that it's now testing at this level, right at this level over here, we would not have a bearish bias right now. It's actually testing this level. So what I do is that I will maintain this level at 25,260 as my short-term pivotal support level. So a bit of excess. So there's a bit of excess over here. Okay, given that this is okay. 215, right? The low is 215. Okay, 215. Okay, given that it's testing this pivotal support level with the excess at 25,215, I will still have a short-term intraday bullish bias over here. So this could be an inflection point where a bounce could take shape for the Hong Kong 33. But however, I will have a upside trigger level for today over here. Okay, so this upside trigger level will be taken into account of the close of yesterday's this bearish Marubozu candlestick at the 11 a.m. Singapore time, where price action starts to consolidate thereafter and do that steep intraday sell-off at the during the US session yesterday. So this will be 25,460, 25,460. All right, over here. Okay, so 25,460 will be my intraday upside trigger level. A breakout above 25,460 will potentially increase the odds of another leg of a bullish impulsive up move sequence, revisiting or retesting 25,750 in the first step. However, if price action starts to break down below 25,215, which is today's intraday low, after testing that lower limit of this minor ascending channel, today's intraday bullish bias will be invalidated to see the start of another round of minor corrective decline, revisiting the next we call it support zone at 24,940 / 24,850 next, which is the former medium term swing high of 19th of March, now turns into a pullback support area at 24,940, 24,850 next. All right, so that's for the Hong Kong 33. Next up will be the Japan 225. All right, so the Japan 225 continues to actually stage that minor corrective decline as it retraced this steep rebound that has taken shape from 22nd of July all the way up to the intraday high of 24th of July. So these 2 days of steep rebound. So price action is now retracing it. So it already hit our first support level that we highlighted yesterday at 41,050, 40,850. Now approaching the 61.8% Fibo retracement at 40,470, and the key short-term pivotal support, which is the 76% Fibo retracement, that confluence with the rising 20-day moving average as well at 40,130, and also this former minor range top of 1st of July to 22nd of July that now turns into a intermediate pullback support as well at 40,130. So with that, we will now have a very tight short-term pivotal resistance level, given that the RSI also at the oversold level right now. So having a very tight pivotal resistance zone at 41,050 / 40,850 for having this residual push down towards 40,470, maximum 40,130. So upon price action level hitting at the 40,470, I'll be looking out for a bullish reversal candlestick to flip my bias back to the bulls again. Why? Because the price action is still trading above the 20-day moving average. However, if the price action didn't actually float down towards the residual didn't stage that residual push down as intended towards the 40,470 level, and instead from here it starts to do a bullish U-turn and break out above 40,850, then today's intraday bearish bias will be invalidated. So the residual push down will be invalidated to kickstart another round of potential fresh impulsive bullish sequence movement to revisit 41,650, followed by the 24th of July minus swing high area at 41,940 / 41,975. So having a very tight short-term pivotal resistance zone for today, 41,050, 40,850 / 41,050. Maintain that bearish bias for a residual push down towards 40,470, maximum 40,130 before another fresh potential impulsive bullish up move sequence materializes for the Japan 225, which is representing the Nikkei 225. Next up will be the Germany 30. So the Germany 30 broke our very tight short-term pivotal support yesterday, which is 24,180. And plunges downwards towards the 50-day moving average, but managed to stop right here. So it seems to us that the Germany 30, since the fresh all-time high of 10th of July, it's been starting to trade in this kind of minor sideways range configuration. Okay, very clearly there's similar high that's being made on Monday and on Tuesday, come break above 23,140 before floating downwards towards the lower limit of this ongoing sideways range configuration since printing a fresh all-time high earlier on 10th of July over here. All right, so with that, since that it's already hit the lower limit of this sideways range, which is also the 50-day moving average, I think very closely as a similar support at 23,930, which is the sideways range configuration. I don't want to be so aggressive to have a bearish bias to play a bearish breakdown of this range. So instead, it could continue to be in this range configuration for now. So using 23,930 as my pivotal support level for today. So potentially there could be a bounce back towards the upper limit of this range going forward. So but however, we are now taking things slow in a couple of sequence. So for today, two key intraday levels to watch out for will be at 24,180, which is the 20-day moving average. Recapturing above the 20-day moving average increases the odds back for a bounce back towards the upper limit of the range. In first step, watch out for the next resistance level at 24,320 before the range resistance at 23,140 that has preventing the bears from a bullish breakout since last Thursday on 24th of July. However, if price action starts to plummet downwards to 23, have a breakdown with a bearish breakdown with an hourly close below 23,930, then we will have a range bearish breakdown scenario unfolding, exposing the next near-term support level at 23,640, followed by 23,450 next. Okay, so that's for the Germany 30. So very quickly, let us now move on to the US Wall Street 30, representing the Dow Jones Industrial Average. So the US Wall Street 30 continues to trade above the short-term pivotal support level, which is so the 20-day moving average, the rising 20-day moving average. So things remains unchanged. So still maintain that bullish bias on the US Wall Street 30 since that it continues to trade above the short-term pivotal support level, and right now he has starts to show a higher low as well as we are speaking right now during the Asia session. Okay, so with that, using 44,620 as my short-term pivotal support level, maintain that intraday bullish bias. First resistance level to watch will be the current all-time high at 41,100 that was tested yesterday during the European session. Can't have a proper clear bullish breakout. So this 41,100 is the current all-time high that is being printed in December last year. Above 45,100, pardon me, which is the current all-time high. Seek out the next intermediate resistance at 45,455 / 45,520, which is being defined by a Fibo extension cluster level. Only a bearish breakdown and an hourly close below 44,620, which is also a breakdown below the rising 20-day moving average, that would invalidate today's intraday bullish bias to kickstart a minor corrective decline sequence, exposing 44,150 in the first step. So that's is the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 also continues to trade above the pivotal support that we have yesterday at 6,370, and also right now as we are speaking, it starts to form a higher low during the Asia session, and also the hourly RSI starts to inch up above the 50 level mark. So no change, still maintaining our positive bias or bullish bias for today, using 6,370 as my short-term pivotal support. First resistance level for sure will be at 6,430, 6,450. That was tested yesterday during the start of the European session before that pullback takes shape. Above 6,450 exposes the next intermediate resistance zone, 6,670, 6,490, which confluence with a Fibo extension cluster level, and as well as the upper limit of this major ascending channel that I drew, medium-term ascending channel that I drew from the low of 23rd of May 2025. However, if price action starts to break down below 6,370 today, with an hourly close below 6,370, today's intraday bullish bias will be invalidated to kickstart a minor corrective decline to expose the next intermediate support zone at 6,340/6,330. So that's for the SPX 500. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 also managed to hold above the gap up support level that's being formed during the start of yesterday Asia session. But given that it hasn't cleared above the 23,480 level, which is my first resistance level that I have yesterday, after almost have a close test of it, I would want to tighten my short-term pivotal support level to be so tight to 23,320. So I'll be still using 23,190 as my short-term pivotal support level for now. Still maintain my intraday bullish bias unless we have a clear bullish breakout and an hourly close above 23,480. Thereafter, I would tighten my short-term pivotal support to 23,320 for today. So for now, still maintaining 23,190 as my short-term pivotal support level. So above 23,480, potentially seek out the next intermediate resistance at 23,710, which is a bunch of Fibo extension clustering level, and also the upper limit of this medium-term ascending channel from May 2025 low. However, if price action starts to break down below 23,190 with an hourly close below it, today's intraday bullish bias will be invalidated to kickstart a minor corrective decline towards 23,020, which will correspond to the rising 20-day moving average. All right, so that sum up the intraday technical outlook of these 6 major stock indices. So now let us move on to the commodities market, starting with Gold XAU/USD. So for Gold XAU/USD, like I mentioned, price action managed to stall at the 3,300 medium-term pivotal support level, and also on the hourly chart of gold, it starts to flash out this bullish divergence as well. So with that, given that it managed to stall at the 3,300 medium-term pivotal support level, I would not want to be so aggressive to have a bearish bias below the 3,300 medium-term pivotal support. And given this current short-term hourly RSI that is flashing out this positive technical element, which is a bullish divergence, indicating that yesterday's intraday sell-off momentum, bearish momentum, has started to ease off. So with that, I'll be watching very closely 3,300 as my medium-term pivotal support level, having a recovery bias scenario for today for gold, at least on an intraday basis. So potentially bullish /recovery bias. First resistance level that you got to surpass will be 3,328. Above it, seek out 3,348, which confluence with the 50-day and very closely the 20-day moving average as well, acting as an intermediate resistance level at around the 3,348. However, if price actions continues to plunge down and break below 3,300, today's bullish /recovery bias scenario will be invalidated to kickstart a very corrective extension of this corrective decline sequence, exposing 3,283 followed by 3,264 next, which is the minor swing low of 9th of July, followed by the minor swing low area of 30th of June. All right, so that's for Gold XAU/USD. Watching closely the pivotal support level at 3,300, which is my medium-term pivotal support, and potentially there could be intraday bullish /recovery bias taking shape for Gold XAU/USD today, with 2 key intermediate resistance level to watch: 3,328 followed by 3,348. Lastly will be the West Texas crude oil over here. So the West Texas crude oil yesterday squeezed up towards the top of this range resistance, which is 6850/6915. So what I could see is that since 25th of June low, it's going to be involved in this sideways range configuration. And given that it's now approaching the top of this range resistance, which is 6850/6915, and as well confluence with the key 200-day moving average as well, it doesn't pace well now to be having a bullish bias. So I'll be using anything that to fit this strength close to 6850/6915. So this will be my key short-term pivotal resistance zone for today. So i.e. Having a bearish bias for West Texas oil, and it may continues to float back towards the lower limit of this sideways range. So support level to watch in the first step for today will be Friday's minor swing low at 66-figure level. A breakdown below 66-figure level exposes the key range support level at 65.20, which is the swing low, which is the minor swing low of 25th of June. However, if price action starts to have a bullish breakout above 69.15, which is also above the 200-day moving average, so that could potentially see a squeeze up towards 69.90, followed by a 71.20 next on West Texas oil. So that also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today, Tuesday? So as we approach the European session thereafter, we do not have any key European data to take note of, but however, during the US session kickstart at 10 p.m. Singapore time, we do have the Conference Board Consumer Confidence Index, something to take note of. For this time around, the market expectation for the month of July, after inching downwards to 93, they are expecting a slight recovery to 95.8. So that could potentially influence the major dollar pair and the major US stock indices movement upon the release of this Conference Board Consumer Confidence Index at 10 p.m. Singapore time. All right, so that sum up today's daily dose of market insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.